We've seen this sort of trend over the past few months where we've seen fast food chains, we saw a massage company, we saw a music rights company sort of agreeing to essentially sell the rights to all of their revenue generating assets. And I'm just sort of wondering what investors are getting out of this with regards to the type of risk that they're taking on.
Well, Romain, one of the biggest things for investors right now is that this represents an opportunity for some extra yield. These whole business bonds typically yield a lot more than, say, like a triple B corporate might. And right now, with all-in yields being very low, investors are looking wherever they can to, maybe get a little bit more pickup, but also not take on too much risk by going into high yield.
And meanwhile, Massage Envy and Jack in the Box aren't really going to be investment grade unless they use these sorts of corporate securitizations, right?
Yes, exactly. It's a very interesting opportunity for some of these companies. Typically, they might need to do a high-yield unsecured bond, maybe like a single B rated. But when they pledge all of their assets like this and have this extra structure around it, these can actually get investment-grade ratings. And that's looked especially good to companies right now because investment-grade yields have fallen a lot more than high yield. Investors really want that extra security right now.
Okay, so break this down for me, Claire. If I go into Jack in the Box and I order a burger and fries, so like 5 cents of that is basically just portioned off to investors, or I go get a massage, Caroline gets a massage, or her pedicure at Massage Envy, a few bucks of that goes directly to investors. Is that how this works?
It's something like that. The big thing that they do is these are all franchise business models. And when you are a franchisee, you pay fees to, use the name to run that Jack in the Box or, Five Guys, something like that. And so they basically put all of those assets in a box. And the revenue from that is what ultimately gets passed through to investors. Generally, these are pretty stable business models, and investors are confident that, they'll get paid in the long run on these.
Now, a long, long time ago, when I started my career, I was having to write about corporate securitizations. And in particular, I remember writing about Manchester United, even, the famed football company over in the UK, or soccer as you might call it here. They were looking at a corporate securitization. What about some more interesting businesses that we're seeing securitizing their debt in this way at the moment, and how it will continue, do you think?
Yeah, the big question now is where does this go? Fast food at this point is almost boring. One of my personal favorites from a few years ago was Dick Clark Productions did a securitization of that catalog. The music rights offering we saw a few weeks ago was, Bob Dylan and Neil Diamond rights. We also saw a chain of preschools even, and investors like that one because, you got to send your kid to school, so preschools look pretty recession resistant.